All right, good evening, boys. Sorry for this fucking late trade recap that I'm doing right now, but I was on the road all day and I couldn't take this video any earlier. Right, I was on my MacBook, just very, very busy, guys. Here's how I made $1,353 trading the Nasdaq this morning. So you can see right here on this big P&L across all my accounts, 467 per account, and how I secured a small 875 payout with Lucid. Okay, small payout, but like I always say, base hits and consistency compounds like a fucking pyramid. Okay, that's my motto. Honestly, that's how I stay profitable. It's only the first week of the month as well. Just quick bread. All right, boys. I plan on. I'm honestly shooting for a five-figure month this month. This is just the beginning. Okay, fellas. Nevertheless, I'm gonna show you guys how I was able to request this payout, following my continuation model that I always follow. Okay, I'm gonna keep this quick and easy, quick and simple, nothing funny. All right, boys. I caught two trades, two long positions right here, right at market opening. Okay, the first trade was a 940, the second trade was a 949. So not exactly right at market opening, but I caught longs. One L, one win, came out green for the day. All right, fellas. Without any bullshit, I'll give you guys a trade breakdown into what I saw, what I took, and why I took these trades. All right, guys. I'm gonna have to go on the replay button real quick. Jesus, I'm taking this video very late, but oh fucking well. Guys, coming into market open, I had a no bias, no bias at all. I know today might have been a tough read in the market for a lot of people. A lot of people were actually bearish on the day. I didn't really have a bias for clean reasons. Okay. So why I wasn't entirely bullish, even though I long, was because price on the 1 hour time frame had already flipped to the downside. Okay, prior to this trade. Okay, we did create a 1 hour bearish gap right here, and we had created, even though this was pre-market, but we had already created another 1 hour bearish gap right here. Okay, and my draws on liquidity for the day were, as we'll see right here, my draws on liquidity for the day were London highs being, I believe it was here. Where the fuck is it? Right here, boys. Sorry. So we had London highs and we had Asia highs. I had those draws into consideration, but we also had London lows. London lows, I believe it got swept like pre-market, like at 9 a.m. But these were the draws on liquidity. And what I also kept into consideration was price was inside a 1 hour bullish gap right here. So I knew and understand we created bearish gaps pre-market, right? But I knew we were inside this 1 hour bullish gap. And if we pay attention to the overall time frame, it's still pretty much bullish, right? It's not, I'm not entirely sold on a bearish PA, right? So I was just came into the day with no bias whatsoever, okay? No bias at all. Okay, I just marked out my draws and I said, okay, as soon as market opens, I'm going to see what price respects, what direction we take, where we displace, where we break out, right? And from there, I'll simply follow my continuation model, which is displacement, retracement, and then entry towards the next round of liquidity. Okay, I let price show me where we're going. Is pretty much what I'm saying. On the 5 minute time frame, we had, do I have a 5 minute gap anywhere here? No, I don't. Why did I mark this gap right here? It must have been an hour. Oh yeah, it was a 1 hour. Yeah, this was the 1 hour gap that I was paying attention to, in case price taps it and rejects it. Okay, fellas. So this is how price looked at 9:28, right before pre-market. And I'm gonna give you guys a POV into what I saw and why I took this. Okay, so that's market open right now, 9:30. Quick rally to the upside. Okay, this place higher. We put in this New York AM low, right? I'm not taking any trades so far yet, which is completely continue pushing further up. So here we tap into this 1 hour. We don't get any rejection from here, right? We don't get something like this, right? Where we tap this and then start rejecting from here and then sweep this New York opening lows. If we would have been bearish, I kind of would have wanted price to do it at this fair value gap after sweeping these 5 minute highs as well, right? These 5 minute highs. But we don't really have a liquidity sweep yet. Those 5 minute highs don't really mean anything, right? But I am expecting price to reject from here if we're bearish, right? As you guys can see, that's exactly not at all what we do. All right, and here we have another fair value gap. Don't really care about this fair value gap at this point, right? Because we already inverted the first gap right about here, right? So this fair value gap is pretty much pointless. What am I paying attention to right now? Okay, I'm looking at price. Okay, we're pumping to the upside. What draws are most likely gonna get taken, fellas? Obviously, I'm looking and paying attention to London highs and Asia highs. Okay, simple as fuck. I don't wait for this sweep to happen and then to try to catch a reversal, even though I know it can play. I simply target the most A plus brain dead easy draw liquidity, which is prices pointing in my direction and breaking down slowly. All I have to do is be patient, wait for the draw to be crystal clear, and then make a decision. Have a safe entry and have an A plus draw on liquidity. All right, boys, that's what I always say, and that's how I trade my continuation model. Okay, so we are above this 1 hour bearish gap already, right? We're inverting this 1 hour bearish gap right here. We're clearly disrespecting bearish PD arrays, and we're respecting and holding bullish order flow. Let's see what price does. Okay, at this point, I want to see a retracement, and then I can maybe catch a safe entry towards where I want to go. I believe I entered here. This is exactly when I entered on the first trade because we retraced back into this 1 minute gap right about here. Right about here, we retrace back into this 1 minute gap. And I think I got stopped out on this trade, honestly. In this trade, I got stopped out on the first longs that I tried to catch. Yeah, there I got stopped out. There, lost about $400. I wasn't really mad. I said, okay, cool. I'm stopped out, hands off. Let's see what price wants to do. However, I'm still bullish on the day. Why? Because we are delivering and displacing from a 1 hour bullish gap, right? We're respecting this hourly bullish gap. This is a clean continuation. All price is doing so far is just giving me a 5-minute retrace into this huge imbalance that we created, right? We put up this imbalance. We have a 5-minute bullish gap. We have a 1 hour bullish gap here, aligning the higher time frames with the lower time frames. That fucking simple. What do? I get stopped out here. Cool, no worries. One loss, I'll take it. What do we put up? We have this internal high here for my target. And guess what? We still have Asia and London highs, which were my initial draw on liquidity to begin with. So I am not entirely bearish. For me to be bearish, price would need to do something like this. Continue putting further down, inverting this imbalance, retrace, and then maybe I'll go towards these lows right here. Not what happened at all, and not what I'm looking at all. I'm still long on the day. I'm still want to see a flip from this point. This imbalance to hold, long towards these internal highs, and ultimately these highs as well. What does price end up doing? Why continuations play so well? Displacement, retracement, boom. There it is. Displacement, retracement, A plus towards this internal high. Okay, fellas, literally easy continuation. And that's when I actually entered the trade. All right, boys. Literally and precisely where you guys just saw it happen. All right, boys, here I go on the replay exactly to show you my entry. I had a quick and early entry today, boys. Very quick and early entry today. I entered right about here. This is my draw on liquidity internal model for 54 points. I was down 400. Here's when I exactly enter. Midpoint of this candle, I believe. Here, midpoint of this candle, exactly where you guys see it. And as you guys can clearly see, TP got hit. TP got hit for a 1 to 2 risk to reward, recovering this loss, making it all back and profiting 1.3K on the day, $400 per account, securing a $875 payout with this easy continuation trade, following my continuation model. Okay, boys, price actually ended up ripping until literally my initial bias. Okay, I could have held this monster all the way here, would have requested a bigger payout, but I don't give a fuck because my model is internal, and this is how I actually can secure a high win rate. Okay. What I give a fuck about is that my bias was correct. Just because the London highs are my draw on liquidity, that doesn't mean that's where my take profit is going to be. Okay, my model is internal. That's how I remain profitable, and that's how I can have a high win rate. Don't want to keep this video too long. 1.3K on the day. Small payout secure with Lucid. And my very first payout secure with Lucid as well. Guys, let me tell you something. They pay instantly. I literally requested that today, and that money was in my bank account instantly. Approved in my bank instantly. Quick as fuck. Okay, so I'm glazing. Honestly, I'm glazing Lucid for that. I'm glazing them for that because that was fucking cool. All right, boys. That was pretty cool. 1.3K on the day. Continuation towards an draw on liquidity. Thank you guys for watching. Hope you guys enjoy this trade recap. If you guys have any questions about this trade, feel free to ask me on the general chat. Again, thank you guys for watching. I will catch you guys on the next one. All right, boys. Peace. Good day. Payout secured. Let's go.